I'm Caleb Silver, and you're listening to Sweet Success.
You've just checked in to Sweet Success. Join me, Katie Cline, for exclusive conversations with hotel executives, hospitality leaders, and industry innovators. Together, we'll uncover the strategies and techniques these masters of hospitality relentlessly refine. Whether you're already in the industry or just starting out, tune in every week to unlock the secret to your sweet success. Hello, everyone, and welcome back to another episode of Sweet Success. I'm your host, Katie Cline, and today I am thrilled to welcome Caleb Silver to the show. Caleb is the editor-in-chief of Investopedia, a global financial media website, which was founded with the mission of helping people improve their financial outcomes. Caleb is also the host of the Investopedia Express live podcast, a weekly show where he digs into the most important stories in finance and global economics. He's an Emmy-nominated business journalist and a frequently featured expert on CNBC, CNN, MSNBC, and many more outlets. Caleb, thank you so much for being here today.
Thanks for having me.
You have such an incredible career. You've led newsrooms, you've reported on global markets, and now you're overseeing one of the most trusted financial media brands in the world, I would say. What drew you to financial journalism in the first place, and what's kept you hooked?
Yeah, well, I'm an accidental business journalist, but I guess I've been doing it for 30 years, so it's no longer an accident. But I was a documentary maker. I had a production company after college, after many years in the restaurant business, the hospitality business. But I wanted to make documentaries. I wanted to make films, and I started doing that when I was about 24, 25, and kind of went throughout Central and South America filming wildlife documentaries and throughout the Southwest. I'm from New Mexico, working on wildlife docs, but I was also a cameraman, a stringer. And I wanted to get better at journalism, so I came to New York City to go to NYU for journalism for my master's degree. And I was a cameraman on the side to make money, what we call a stringer, a freelancer. I had my own gear. So I started doing a lot of freelancing with Bloomberg and CNBC, which were new business TV networks. Remember, this is kind of the late 90s. The internet bubble was getting pretty frothy, and these business networks were popping up because retail investors were becoming very engaged with the market because there were so many hot stocks, and it was one of those mania moments, and I just happened to be at the right place at the right time as a shooter, as a cameraman, as a camera operator, and eventually started doing some producing work with Bloomberg and interned there, and they hired me a couple of years later, right at the zenith of the internet bubble, and watched it explode, lost some money, but learned a lot, and spent about 8.5 years at Bloomberg, and then moved over to CNN.
Wow. Well, to me, that part of your background makes sense with what you're doing now. But I heard that you also started your career producing wildlife documentaries. Is that right?
Yeah, that's right. I'm from New Mexico. Grew up, hiking around the mountains and exploring there. But I was also really passionate about documentary filmmaking and about nature and preserving it. So I started doing that literally on my own. I scratched up enough money working in the restaurant business, took my tips, bought myself a TV camera, which you needed back in the day, and a tripod and sound gear, and literally pre-internet would call up the news stations in Albuquerque. I was living in Santa Fe, about an hour north, and say, hey, this or that is going on. There's a logging protest or all these different environmental activities or stories. And they didn't have anybody up north. So I would go shoot the stories and then take my truck and drive them down to the news stations and sell the footage, and got into it that way, and started doing some other nature documentaries with groups in the Southwest, and then took myself on a sort of a vision quest throughout Central and South America, hitchhiked literally from Mexico City to southern Chile, working with different environmental groups, shooting footage for them, trading the footage for room and board. So I did it with Greenpeace. I did it with Ancient Forests International, Rios Tropicales in Costa Rica. And it was a barter exchange, but I wanted the experience. They wanted the footage. I had the gear. It gave me access to the media world and to start my career and build a reel, as we say, making really cool documentaries and campaign videos.
Wow, that's so cool. I mean, I just love everything about that story too, because it's like how did you even know where to buy a TV camera or how to edit this? Or it sounds like you just kind of figured it out along the way. Like it sounds like you're someone who's probably quite passionate about the environment, nature. Is that what the kind of
Yeah,
calling
that was
was?
it.
Yeah.
That was it, but it was the storytelling I liked. Interaction, how humans interact with nature. How I was doing black bear videos because black bear visits were becoming more common throughout the the communities in New Mexico that were close to the mountains. But I also was a Boy Scout, so I was already sort of ingrained in it. I grew up respecting and loving nature. Not crazy that I married a conservation biologist who I met down in South America as well. So that was part of it. But I wanted to be a storyteller. I really loved storytelling. I love movies. Thought I might be a film director, but it was the docs that got to me. Frederick Wiseman and Ken Burns, and watching their beautiful storytelling through documentary that hooked me. And I took myself, again, pre-internet, faxing these groups like Greenpeace in Brazil, saying, "Hey, I'm going to be, in southern Bahia during this period of time. I know you have a campaign there." I was reading about it in magazines, PS, at the public library, and then going off and contacting these people. And they're like, "Hey, free footage, we'll take you around." And that's exactly how it ended up playing out.
And how long did you end up staying in South America for all of those trips?
Yeah, for about 6 months on that first trip. 6 months, ended up falling in love down there. And then ended up going back there several times and doing much more documentary work with environmental groups in Brazil, but also started shooting interviews with Holocaust survivors for the Shoah Foundation, founded by Steven Spielberg. Right after he created Schindler's List, he created a visual history foundation to gather Holocaust survivor interviews. And I was the first person to do that in Uruguay and help them launch the program in Buenos Aires. So I found ways to keep going back to South America, A, because I fell in love, but B, I fell in love with the place. And I was able to use my skills as a producer and camera operator to make a living.
Yeah. Do you speak Spanish?
Claro que sí.
Oh, wow. Amazing. So was it when you came?
I grew up cooking in Mexican restaurants and New Mexican restaurants. So I was typically, one of the only gringos in the back, peeling chilies and chopping onions. And I had to learn Spanish to work in Santa Fe. And I grew up literally working in kitchens or in the front of the house in those types of environments where it was pretty common to learn Spanish. So I have pretty good kitchen Spanish, but my wife's from Uruguay, so I also have some Rio de la Plata Castellano también.
Amazing. And was it when you came back to the States that you then started more on the kind of Bloomberg, CNN, more business, financial media focus?
Yeah, it was because I was in New York and I was in journalism school getting my master's degree at NYU. And there was an internship program with Bloomberg TV, which was just starting. This is Michael Bloomberg's network that he started after making a fortune creating the Bloomberg terminal. And they were just starting a TV network to sort of convey the magic of the terminal and news that mattered to investors through television. Again, business news on TV. I mean, Louis Ruckeiser was doing it as a talk show, but actually doing business around the clock, that was kind of new. And I was a little bit of a right place, right time. But if it weren't for the fact that I could operate a television camera and edit, I wouldn't have been able to get in because I could do it all. I was a Swiss Army knife. I was kind of a solution to a lot of problems for them. And then I ended up getting the bug, both as an investor and as a business news journalist.
I want to talk about you as an investor. And I think that word is really intimidating to people, investing. So if you were going to give us that kind of 101 explanation of what is investing, how do you see it?
Yeah, I see it as paying your future self, right? The investments you make today is really a payment for your future self to be the you want to be. When I think about financial planning in general and wealth management and these big industries, what are they really about? They're really about determining the cost of what it means to be you today and what the cost will be to be the you want to be in the future. And that's a big concept for a lot of people. But when you think about that, it's not how much money do I need to make? It is who's the person I want to be? What kind of a life do I want to live? And my wife and I do this with a financial planner, but this is an important conversation that I don't think a lot of people have. People are struggling getting by day to day, thinking about a number. We're thinking about a lifestyle, and then we back the number into the lifestyle. So investing is a way to say, I'm going to pay my future self so that I can be the person I want to be, or we can be the family we want to be in the future.
Yeah. Yeah, I think you're right. People get stuck in the like survival of today, and they really need to think about the future. We all do. I've heard some people say that just putting money in a savings account, particularly if it's not a high yield savings account, that's never going to create the wealth that people maybe think it will. Is that opinion that you share? And what are some investments that you do think are the ways to make sure you're going to have that family, that personal life in the future that you want?
Yeah. So I defined it as paying your future self. But if you also think about it from a fundamental economic perspective, the value of our dollar shrinks every single day. That's called inflation, right?
Mhm.
It just, the valuation continues to go down because things get more expensive. We don't necessarily, on the median income side, continue to earn more. We don't out earn inflation. So how do you make your money grow and beat inflation? The fact that what you have in the bank or what you're making is literally disintegrating by the second. That's just the way it is. So you have to find a way to outpace inflation to have enough money to live the life you want to live, but also put enough away so that your money actually grows upon itself. And that's what we call compounding. That's the ninth wonder of the world. That's what Einstein called it. That's because money can actually grow on itself if it's invested well and earning you a yield. And a lot of people, say, I'm saving, I have a savings account. And I say, what's the yield on your savings account? And usually they don't know because they're not reading the fine print, but usually it's pretty minuscule. So if you're not earning 4 or 5% and inflation is, 2 to 3%, you're barely out earning inflation. And that is not a way to grow your money to pay your future self. That is a way to just get by. So you have to think of it this way. You work in a job, potentially. Maybe you're a W-2 employee, a salaried employee like I am, and you earn your paycheck. And that's you putting in 50, 60 hours a week for that amount of money. That's you, with your labor, literally putting it on your back and earning it. And then there's your investments. That's over here. That never gets tired. That works 24/7, 365, because that money is invested and it's compounding. If it's invested well, like in the stock market and other assets that grow, that never stops. That never gets tired. You get tired. You need to take the weekend off. You need a vacation. Money never needs a vacation.
Yeah. Is the stock market where you would suggest people invest first, or is there kind of that first step?
Yeah, well, absolutely. The stock market is a place where I would suggest people invest first. And we always say here at Investopedia, the best day to start investing was yesterday. Second best day is today. Now, why the stock market? And this is a question. Look, I'm in my mid 50s and I still struggle with this. And I'm a financial educator and I preach investing in the stock market. But on average, it grows about 10% a year. And why does that happen? Right? My kids, 19 and 21, they're very smart. They ask the right insightful questions. The premise behind why does that keep happening? It's one you really have to put your mind around and you have to see it in action and then give it time. And that's because we are, as investors, betting on future growth, future profitability growth of companies. And over the past 100 years, we've had incredible advancements and developments in companies that have revolutionized the way we live. They are doing this and making a lot of money in the process. And you don't just have to be a customer. You can be an owner, and that's owning equity. That's owning stock in a company, a piece of it, a real piece, your fraction of it. And that fraction of it grows as long as that company is growing its profits. Now, you can go out there and try to pick the best stocks in the market and think you can be a better stock picker than Warren Buffett or some of the legends out there. The truth of the matter is just invest in the stock market itself. It's a 10% return, usually every single year. Now, we've had crashes and we've had, dips and corrections and we've had crises, and yet the stock market marches on. It finds a way to recover because companies continue to grow their profits. And we as investors continue, in general, to invest in them almost every 2 weeks with our 401ks or our IRAs. And then there's the big institutions that are betting and backing these companies as well. As long as that's happening, companies are growing their profits, returning the money to shareholders through a higher share price or dividends. That's why the stock market grows. That's why we suggest that as a great place to start.
Yeah, I think financial literacy is so important. And I really want to talk about what you guys do at Investopedia, because I think you really help with that. But even the 401k that you just referenced, I think something that people don't know, including myself, is just because the money is going into the 401k, you then need to take the step to choose where that's being invested. Because I had some accounts fairly recently, more recent than I want to admit, that I looked and said, oh my gosh, that money's just sitting there. It's not even invested in anything. It's just sitting there, which is way worse than it's not even in a high yield savings account. So, with financial literacy being such a powerful tool, what do you think are maybe some of the misconceptions that you see? Or are there any books, or where would you say people should start here if you really don't know anything?
Yeah. Start at Investopedia.com. We're free. We've been around for 26 years, delivering free financial education to everyone who wants it. But there's other places, obviously. The biggest misconception is that investing is like gambling. Trading is like gambling. Investing is like paying your future self, as I said before. So that's a huge misconception a lot of people have. People don't invest because they think the stock market's risky and it can crash. And they're absolutely right. It's risky and it can crash, but that's the price you pay to be in it for the long term, to actually accumulate long-term gains and appreciate the compounding. We've had many crashes over the last 100 years. We've had a few crashes over the last 10 years. And guess what? The stock market recovers. And why does it recover? Because we keep believing. And as long as we keep believing and keep investing every couple of weeks, and companies continue to grow, and we have a capitalist system that we can trust, and that's very important right now, especially right now, then I don't see why that should stop. I'm going to continue to invest until I'm in my 70s and beyond, potentially, because I still believe in it. And I've seen the magic of the rebounds, and I've seen the magic of compounding happen. And it doesn't happen right away. You start investing when you're 25, not going to feel it at 28. You're not going to feel it at 32. But come 35, come 40, when you get into those life stages and your money's been doing that work for you in the market, compounding, growing upon itself, you're going to look up and go, "What? How did I become a millionaire? I was just doing my thing."
Yeah. And for those of us who are unfortunately not in our 20s anymore, I think it goes back to what you said earlier. Like, the best time to invest was yesterday, but we can still get started today and see material growth in our lifetime.
Absolutely. And the stock market is one place, and that's the one I would focus on just because it's accessible to everyone. It's never been easier to invest. There's no fees. There's no fees for trading, for buying stocks, or buying index funds or exchange traded funds. You can start with $50. You don't need $5,000. You don't need $1 million. All that's gone, right? It's wide open. There's plenty of apps that want you to do it. I'm sure your bank is offering you a place to do it as well. So that's one place to do it. But then we talk about diversification as well. And that could be real estate. A lot of people say my most valuable asset is not my 401k or my IRA or my brokerage account. It's my home, or I own multiple homes. And that's a way to earn wealth over time and grow wealth over time as well. It's just real estate investments don't have that appreciation that the stock market does. The real return on real estate is 3 or 4%. That said, it's an emotional investment. You need a place to live. You need a roof over your head. You create memories there. You build a family there. Maybe you pass it down to your kids. Maybe you pass it down to your grandkids. It's part of legacy. So it has a emotional value as well as a numeric value, a dollar amount. And maybe if you're a smart real estate investor and you can flip houses, that's very different than what I'm talking about.
Right.
But that's a place to put some money as well. And then there's other things like cryptocurrency and gold that should have a small part of your portfolio potentially. And there's even more asset classes that are coming that retail investors are going to have access to. And you have to decide for yourself whether you want those in your risk world, whether you can tolerate them. But start with the stock market just because, it's kind of undefeated.
Yeah. I'm excited that you talked about real estate. I'm a huge real estate lover. I own 2 short-term rentals with the 3rd under contract right now. And I'm interested in your opinion because you kind of touched on it there. I think there is a misconception within real estate about your own personal home. And there's a debate on, is your personal home an investment? Or like you said, there's other things that your personal home is providing: roof over your head, stability, security, etc. How do you see that breaking down? Is that personal home an investment, or are you talking more about, like you said, flips and rentals, etc.?
No, I'm talking about your personal home as an investment, right? It's an investment for a lot of different reasons. One, you have equity in it, right? Hopefully you pay off your mortgage over time, you own the thing outright, and if you ever do need to sell it, it's probably grown in value if it's anywhere in the United States. It can appreciate over time as an asset. But again, you also need a place to live. So you're either paying yourself and earning equity on it through the ownership of the home, or you're paying somebody else for the privilege of living in their home. Now, you're a real estate owner, you're a real estate investor, right? You are a landlady.
Landlady,
So
lady of the land.
you're right. And so it's a way for you to earn passive income as well. Now, I say passive in that, you're kind of getting paid rent every month on that, but it's pretty active because when somebody has a problem, they're calling Katie Cline.
For sure. And especially with short-term rentals, I think that is a big misconception, unless you have a management company. But anyway,
you can do
we
that too, but
digress.
still that takes away from the profit you earn.
Exactly. And you're probably managing them to make sure that they're doing it effectively as well. Yeah. Talk to me about crypto, because that is something that feels like an alien spaceship has come down to Earth and is like giving me this like green shiny orb. I know nothing about it. I'm very intimidated by it. What is your thoughts?
Let's start with why it's even here in the first place. And let's start with Bitcoin, the big one, the OG, right? Bitcoin was created somewhere around 2009 in the ashes of the financial crisis by a entity known as Satoshi Nakamoto. We don't know if that's a real person, a group of people. It's kind of like the usual suspects, Kaiser Soze. We've never met this individual or this entity before. A lot of people claim to be that entity, but it doesn't matter. There's a software program. They created a digital currency called Bitcoin, digital, coin, currency, literally out of software by mining literally what we call blocks. And those blocks sit on something called the blockchain. The blockchain is a distributed digital ledger out there in the internet and beyond, where every transaction is recorded. Everything has a hash. Everything that happens on it is recorded. We all know who owns what. And you, if you're an investor in Bitcoin, you have a wallet where you store your Bitcoin. Now, it was created as an alternative to the dollar, as an alternative to real currency. It's only backed by software, and it's mined, and there'll only ever be 21 million ever mined or created. That was the way the software was written. And the whole point of it was the dollar can be printed, the dollar can be devalued. We can overspend as a country as we do. We can have a mounting deficit, and the value of our dollars, I explained earlier, just keeps shrinking every year. What if we created a digital currency that lived on this blockchain where everybody could see what would happen, and there was a limited amount of it, but it doesn't get devalued necessarily because of a deficit, right? It's worth as much as the next person is willing to pay for it, and it might have utility, like sending money overseas. If you have relatives in another country, you know what it's like to send a money order. You get a 20% fee, 20% that you have to pay in fees, plus it takes a couple of days to clear. The other person has to go and get it. Well, Bitcoin's not like that. You can transfer it over the blockchain almost immediately, and that's peer-to-peer transfer. There's no central government that controls it. It's not controlled by our treasury. It's controlled by the people who use it, and it's all listed on the blockchain. Now, that's a very long explanation, but why was it created out of the great financial crisis? Because we proved that we could not handle our mortgages, and our banks took too risky bets, and people took out mortgages they could not afford. And that just shows you that the value of our dollar is not as valuable as we thought it was, and it's pretty risky. Bitcoin doesn't necessarily have that. It has other risks in it. So it's decentralized. There's no government control. It's peer-to-peer. I can send it to you. You can send it to me. There's nobody that's taking a fee in between, right? And that's the attractiveness of it. Now, out of that, a lot of other coins and tokens were born, because you can literally create anything out of software these days. And if somebody thinks it has a value, the next person, we call it the greater fool theory in finance, they think it has value, well, that they'll continue to buy it and the price will go up. But again, not backed by gold, not backed by the dollar, not controlled by a government. That's the attractiveness of cryptocurrency. And a lot of people have made a lot of money on it. Bitcoin has appreciated over 5 million% since it was created in 2009. We've never seen an asset, and I put it in air quotes, like that in history.
Wow. If it's appreciated that much and there's only a finite amount, does it become a point where it's completely unaffordable to certain people? Or is it like the stock market in the sense that you can invest what you can invest, and you might not?
You don't have to buy a Bitcoin at $122,000 per Bitcoin
right.
Today. You can buy 50 cents worth and own just a fraction of a fraction of a fraction of it. Now, what do you own ultimately? Well, you own a digital token. Now, you can't go get it in the bank and wear it around your neck, right? It is, you are making you're suspending the disbelief that you have to be able to hold money in your hand. But think of the way we transact today, you and me, right? You order an Uber, right? You put an order on your phone, your credit card's already stored there, you get it out of the Uber, you pay, you tip, it's over. You've just transacted that way. Cash App is very similar. Venmo is very similar. We're transacting digitally already, and with the assumption that we're transacting in the same legal tender, that's the US dollar, and that you and I believe that that dollar's worth a dollar. And our bank, the intermediary, or our credit card company, the intermediary, supports that. And it's backed by the FDIC, right? The Federal Deposit Insurance Corporation. So there's a belief that we have all subscribed to, that, you know, Alexander Hamilton helped create in this country, that we will all kind of respect this as the dollar. Well, if you've seen over time, there's been a lot of other alternatives to it, including other currencies around the world that have created great value as well. The euro is one of them. The yen is another. The yuan is another. So, you know, and back in the early days of this country, in the Civil War, there was currencies from every single state. Every single state had their own paper. So what is money at the end of the day? It's an exchange, right? It's a medium of exchange. So if you and I both believe that Bitcoin has a value, and more people continue to believe that, well, that price is going to go up, and there will only ever be 21 million mined. Now we're right at around 19.5 million mined, but the closer you get to that 21 million, the harder it is to mine that cryptocurrency. It takes supercomputing power to solve these calculated equations to create one Bitcoin. Right? So the closer we get, the harder it will become to mine, and we won't get to 21 million until sometime in the next century, where you and I won't be here. But that's when, you know, we'll see. That's why you see that value continue to appreciate. And the biggest financial institutions in the world have been building their own stashes of cryptocurrencies like Bitcoin, because they know that we are really digital animals when it comes to the exchange of currency, the exchange of money, and Bitcoin should be a part of that equation as well. So you'll see BlackRock has $78 billion worth of Bitcoin. That's one of the biggest asset managers out there. You can now access Bitcoin, and you will be able to soon through your 401ks in one form or another. So it's coming. And that's why I say people should own a little bit of it and understand the ecosystem.
The next time you're traveling or celebrating an important occasion, book a photographer photo shoot. They make it easy to capture memories by connecting you with hand-picked professional photographers in over 350 destinations around the world. I should know. Capturing memories with family and friends is super important to me, and I've booked photographers from Maine to Paris to London. A photographer shoot is an essential part of every trip I plan. They also have an incredible affiliate and travel advisor program. Add a photo shoot to your customer's next itinerary and earn 10% commission. Visit flytographer.com/sweet success for $25 off your first shoot, or to sign up as an affiliate or travel advisor. That's flytographer.com/sweet, like hotel suite, success. That's fascinating. You're talking to the exact right person about that too, because I lived in the UK for 6 years, and I feel like they're a bit ahead of us in terms of like the ubiquitousness of digital payments. I would leave the house with only my phone, always. And I would always pay, you know, via Apple Pay, essentially. But you're right, there's no physical money. And there's actually a lot of places in the UK, especially I lived in London, so in London specifically, that do not accept cash. They only accept card. So it was a bit interesting for me to come back to the States, where now we're being charged extra for using digital payments. It seems like every restaurant is charging you a credit card fee or an additional, like changing the price if you're paying in credit versus cash. I'm sure that has to do with some shady tax stuff, which we won't touch on. But it's true. Like if in that sense, I'm already using all these digital payments, when you explain it like that, it doesn't really sound far-fetched anymore. And thank you for no longer making it sound like something out of a sci-fi movie for me.
It's pretty deep when you think about it. But, you know, when we were exchanging shells with each other and saying this shell is worth more than that shell, what were we doing? Right?
Sure.
We were believing that, okay, this shell suddenly is more valuable than this. Okay, we're not going to use shells anymore. We found these metal things, or we're going to stamp this person's face into it. And now that is currency. Okay, everybody down with that? Let's go. So it won't be crazy in 5-10 years when you go to pay for something and they'll say, would you like your rewards in Bitcoin, or would you like it in legal tender, or would you like it in, you know, some other coin we have never heard of yet, but I'm sure we will pretty soon.
But you did also talk about gold, obviously more physical than everything we were just talking about. That's something that's interesting to me because I don't really know how you would invest in that. Like I picture like the Sultan's tomb and you've just got like coins and jewels and rubies behind you. How do people today invest in gold if they want to, and why would they want to do that?
Well, gold has a value to it, right? By the ounce. It's hard to mine. There is a limited supply, but we can always keep digging for it. So you can buy physical gold. And if you go to places like India, that they do a lot of that, right? Gold is a very common gift for weddings and birthdays, and collecting gold and having your stash of gold that you put in a safe and you bury it somewhere. That's pretty common, and it has a value because gold is measured by the ounce, and you can go sell it on the open market if you had to, if you wanted to. You can buy proxies for gold as well. And that can be in the form of an exchange traded fund, an ETF, which is like an index fund, like a mutual fund, except it's, made up, and you don't actually own the gold. You own something that tracks the price of gold. So if you just want to have a hedge and you just want to own something that literally tracks the price, a proxy, there's an exchange traded fund for that. You can also buy stock in gold miners, the companies that are actually digging for it and holding on to its reserves. And there's some popular companies around the world that do this. If that's your speed and you're okay with companies that are digging through the earth for this precious metal and owning a piece of them, you can own it that way as well. And you can own gold bars too. You can buy them at little ones at Costco. You can buy bigger ones at gold dealers. If you've ever held a actual gold bar in your hands, it's pretty heavy. So it's kind of hard to stash. That's why a lot of people like proxies for gold. Like index funds or exchange traded funds. So there's multiple ways to get at it, or you can just buy gold futures, a bet on the future price of gold in the options market. You'll never hold the asset. You'll never go to your vault and take it out and show it to people. It won't go around your neck. You're just betting on the price.
Right. I'm wondering if you have an answer for this, but it almost sounds like there's kind of two camps, and maybe the answer is to be someplace in between. But there's the like physical store of wealth, like the gold, the real estate, where there's like a tangible asset. And then there's everything we were talking about with crypto and more digital payments. Do you think one way makes more sense or is better than the other? Or is it just more about like risk appetite or interest?
Yeah, it kind of depends on who you are and how you live. And that's a weird way of saying it. But if you want to own physical gold, you got to put it somewhere, right? Yeah. So, and putting it somewhere, if you own a lot of it, that means, storing it in a vault, and you're paying money to store it in a vault, right? You have to deal with the physical asset. But some people like to see, touch, and feel and show off their assets, right? That's part of who we are. The whip, the drip, the bling, the things. And some people just prefer that, and they can say, when I need to make some money, when I need to raise capital, I will take this chunk of gold and I will go down to the Diamond District or go down to, a gold dealer, and they'll weigh it and they'll give me legal tender for it. And that's kind of how it's going to work. Some people prefer that. Other people just like to own the asset, again, in air quotes, whether it's through proxy, like an exchange traded fund, or owning gold futures, or owning contracts to buy gold, where you never really take delivery of it. So it really depends on the type of investor you are. And if you're that person that needs to see it, you have the 12-car garage and you want to show off your Rolls Royces and you want to show off your gold vault and your wine collection, I get it. There are people that want that, and it's got to be tangible to them. And there are other people that are like, I really don't care. It's a number. It's a series of commas on my balance sheet with a name on it. And it's just like anything else. And when it goes up, I make more money.
You took the reins at Investopedia in 2016. So in that amount of time, a lot has changed, both in media and in the markets. What do you think is different from then to now? And what do you think has stayed the same and will maybe continue to stay the same?
Yeah, well, a lot has changed in media in general. And Investopedia was built in 1999 by two Canadians, both named Corey, in Alberta. With its dictionary, and that is, making complicated financial terms more easy to understand. But it was literally a financial dictionary or encyclopedia, hence the name. But it also had test prep for people that wanted to get into securities trading or wanted to find their way into Wall Street one way or the other. That was a really good idea. But what the really good idea was in 1999 is Corey's both said, there's this company in Mountain View, California, called Google. And these two guys, Sergey and Larry, and they're in a garage and they're trying to index the whole internet. what if we put this whole dictionary and all this test prep on the internet and made it really easy for people to find? And we had this crafty name, Investopedia. Maybe they would point to it. Maybe Google would point to it, and people would search our, and find our content. And they were 100% right. Right? They had a great idea, and they also helped a lot of people learn investing in finance for the first time. Well, Google is no longer that company anymore. That used to be used to deliver answers to us when we were looking for them. Now Google delivers what it wants to us. So, and that is through AI, and that is through the way that the SERP works, the search engine results page. Right? It's one of the biggest advertisers in the world, but it doesn't work that way anymore, where it just points people to your content. It wants you to see what it wants you to see. So we've had to find ways to get our content to our readers, our listeners, our reviewers, wherever they are now. And the way people have consumed content has changed a lot too. I have a 19 and a 21-year-old daughter, and they rarely see me on television. I'm on television 10 times a week. But they'll see me on Instagram with a clip from television, or they'll see my backstage thing, or they'll hear about it, or somebody will clip me and aggregate me and put me somewhere, and they'll say that they saw me somewhere else. So wherever the audience is, that's where we need to be. And in the last, I would say, 7 or 8 years, we've been trying to evolve the way we deliver our content and also keep this incredible brand alive. There's really one thing that you said stays the same, and that is brand trust, right? Travel and leisure, food and wine, people. I'm talking about brands inside the Dotdash Meredith universe. Investopedia, 26 years on the internet is like 260 real years, right? Like a dinosaur. But why? Because people trust us. It's a great name, but if they didn't trust us because we didn't deliver the right answer when they were seeking it one way or the other, we wouldn't be here anymore. We'd be one of those great brands that just didn't make it out of Internet 2.0. Now, it's a struggle to be a digital brand in 2025 because AI and the pace and rate of adoption and the Pac-Manning of content by AI companies that are just literally stealing our content across our network, but across every publisher out there and just surfacing it for people without paying for it, that could be a death blow to businesses like ours if we just let it happen. But we don't just let it happen. That's why I have a live vodcast. That's why I'm out there on other media and other people's shows a lot. That's why I go speak at conferences. That's why we're creating live events. That's why we created, TikTok channels and different ways to engage with our readers wherever they are, because they've evolved and they're constantly evolving, but we want this brand to always stand for the same thing, which is we're going to make you smarter about money so you can make better decisions.
Yeah. I think the brand trust piece of it is so crucial, especially in this world that's happening around us with AI. Learning that AI can be wrong, learning that AI can make things up and just completely be inaccurate. And we've seen it, it's been coming even before this adoption of AI in terms of having to question sources and where things are on the internet. Sure. I think that's where people are going to turn back to brands like yours, like you said, travel and leisure, like food and wine, where there's trust there. And the other thing that I'm hearing too is those are emotional spaces, right? When you're traveling, when you're eating, these are really emotional experiences. But I think more than anything, your money is super emotional. And like you said, if you aren't providing that trusted resource for people and they're, making a mistake or not learning or educating themselves in the correct way, they're very quickly not going to come back. Alternatively, because you have built that trust with them, they're now saying, I don't know that I can trust this Google search. I don't know that I believe what ChatGPT told me. I'm going to go to Investopedia and see what the experts there are saying, or go to a in live event or watch you on TV or something, to actually have the confidence that I'm making the right decision with something that is so important and crucial to my future.
From your lips to their ears and eyes. No, and that's what we believe. We believe that.
Yeah. Do you think there's a personal finance lesson or guiding principle that you return to time and again, no matter what's happening in the markets or going on around you?
Yeah, I have a few, but I think one of the core ones is know what you own. A lot of people say, especially in times of volatility, when there's a big sell-off in the market or it's choppy, don't look at your 401k, don't look at your retirement account. And I say the opposite. Look at it. Know what you own, right? Know where you are. Be the CFO of your own life. No one's going to come and do it for you. We don't get taught this in high school. We don't get taught it in college. What do? We graduate college. Those of us that have to take loans, we walk out with $36,000 on average in loans into a job market that's more and more uncertain, into a world that's just facing constant inflation, right? And we're waiting around for somebody to figure it out for us. No one's going to figure it out for you. Yeah. Figure it out for yourself. Be the CFO of your own life. Take control of it. Don't hide in the sand. Don't say I don't know anything about investing, or my wife handles that, or my husband handles that, or my dad handles. No, you handle that, and start handling it at a young age and learn, because one thing that will cripple you forever is not understanding how your finances work and not understanding how money actually works. And again, there's books out there, there's Investopedia, there's plenty of resources out there, but it's on you to sit down and learn it so that you have the control of it. And you're never that person that's like, I just can't. And I'm the editor-in-chief of Investopedia. I'm 30 years in the game as a business journalist. I've been through market cycles, crashes, ups, downs, ins and outs. I have a financial advisor. You know why? Because I don't know what I don't know. Mm-hmm. But I do know that my financial life gets more and more complicated. And as the more complicated it gets, the more time it takes me to get my head around it. But I want a pro there to help guide me, right? And help me and my wife and my family live the life that we want to live into the future. And I just don't know all the ins and outs of that. Plus, I got a job. I'm busy. So if you can get financial advice, take it. But it's on you to get in the driver's seat and say, I'm doing this, right? I'm not going to let it happen. I'm not going to let myself get buried in debt and spend myself into a doom cycle because I'm afraid of, facing up to it. So that's lesson number one. And then I said it earlier, you got to start early. And starting early doesn't mean starting with a fortune. It means starting with whatever, but making it consistent when it comes to investing. And that means auto investing, right? That means saying every time Katie gets paid, 10% goes to future Katie, automatic. And I have it allocated. You mentioned that earlier. People don't know what's in their 401k. It's one thing to have it. It's one thing to have a retirement account. But if you haven't invested that money in the stock market itself or in individual securities or in a broad basket of things, then nothing's growing. It's like having a garden but not planting the seeds. You got to get it in there. And then you got to keep feeding that, watering it, and adding more to it, dollar cost averaging, continuing to do it day in, day out, and the highs and the lows, ups and downs, rain or shine, right? This is how money is made over time. It's not, I have a great idea and I'm going to take a flyer. No, you're going to probably lose money. But if you just keep doing it, building brick by brick, you're going to be surprised at the wealth that you're going to be able to create for yourself and your family, and then potentially pass that on.
The fear and the lack of education is so real. I was one of those people graduating from college with a mountain of student debt. And I remember when I was in my first job, I met with a financial advisor, which I still think back and think, what a kind man to meet with me when I was making no money. And he was the one who taught me, okay, look at your interest rates. And if some of my student loans were like 2.2% interest, he's like, that's slower than inflation. Pay that one last. Focus on these, those types of things that I'm a fairly intelligent person. I had just never been taught that. And I do think it's very human of us all to go, ooh, scary, no thanks. Or like you said, oh, that's this person's job in the family, it's not mine. And it's so empowering to hear that somebody like yourself, Caleb, works with a financial advisor, because I kind of almost think of it like the gym, right? If you want to get fit or healthy, you work with a nutritionist, you work with a trainer, you work with somebody who that's their job day in and day out. Because like you said, you have a full-time job, you have a family, you have a lot of other things going on that while you have a ton more knowledge than somebody like myself, you still don't want to be in it all day, every day, because you want to be living your life. You want your finances to support that life that you have built.
Yeah. And I've also been prone to make mistakes. When I thought I was, flying too close to the sun, a little dataless, thinking I could pick the right stocks. And I got burned many times. So I'm not really good at that. At the same time, I come from a little financial trauma. So I'm risk averse at times too. My emotions, my animal spirits, they mess with me. And I will make weird decisions one way or the other that'll probably end up hurting me in the long run. Now, I do this with my wife. I don't do this on my own. We're never going to be that couple that says, oh, he handles that, she handles that. Now, there are some things we handle, but we talk about it. She's a scientist. She is a biologist. She wears our financial advisor out with the hardest questions. They're not complicated, but they speak to the spirit of why this whole thing works and why it should work. So he comes out of those meetings exhausted, but I'm grateful for it because I'm so high level with him. And she's like, well, slow it down, break it apart, deconstruct this for me. Because if she can't understand it as a scientist, we're not doing it.
Yeah. Are you comfortable talking a bit about that financial trauma that you referenced?
Yeah. I mean, it's not like I grew up, I had, food and a roof over my head, and my parents paid for college, and they took care of me. But there were some bad decisions made along the way. Really bad decisions that got compounded by even worse decisions. And then an avoidance of talking about them that resulted in loss of homes. They pretty much lost every home, except for the one they live in now, that they've accumulated, that they were able to buy over the years, and their assets, just because they wouldn't face up to the facts of what was actually happening. And then they wouldn't talk about what to do about it as a family. There was no plan around it. There was always this notions of grandeur, or, it's never going to happen to me type of thing. But guess what? It happened, and it happened big time. And from a very young age, I was watching this as a teenager, and remembering those arguments, remembering those non-conversations, but also remembering having to hide assets because someone was coming for them. And I said to myself, I'm not going out like that. I'm going to go make my own money. I started working when I was 12 in the restaurant business until I was 24. And that's how I launched myself into my own career. But that's also how I built my own foundation of saving that allowed me to move to New York, that allowed me to buy that television camera, to develop myself into the career that I wanted to have ultimately, because I said, I'm taking control of this myself. And that's, a lesson that I had to learn at a painful young age. But I also knew that I didn't want anybody else to be in control of it or have to blame somebody as I got older because they didn't do the right thing. I wanted to be about me.
So much of what we experience in our childhood, I think particularly around finances, impacts how we handle our finances today. And now I'm on the other side. I'm a mom. My kids are a little bit younger than yours. I have a 3-year-old and a 2-month-old. But I'm thinking about what am I doing and how am I impacting them in the future? That's a lot of pressure as well, right? So what do you wish people understood more about building wealth?
That it's really one brick at a time, right? They're not going to, a lot of people walk around saying, I should have got in on that stock, or I should have bought at the lows, and the shoulda, coulda, wouldas. And literally, that's just a waste of breath and a waste of time. It's one brick, $1, $20 at a time, but it's consistency over time. That's one thing about building wealth. It doesn't happen overnight. It's the time part of it that's the magic, and that's hard for people to swallow. It's a marathon, not a sprint. Now you're going to read about, see it on the gram everywhere you look about people that made it real fast, right? Or got rich real fast. But I want people to understand the difference and know it in their heart and soul between being rich and being wealthy, and which one is more important to you. Now, I have my own definition for both. And rich, I think we see all the time. It's the drip, it's the whip, it's all the stuff on Instagram and Snap and all over social media, because that gets our attention. That, gets our animal spirits cooking, howling at the moon. But wealth is the ability to afford your time. The most valuable asset you actually have is your time. Think about it. You're a mom. Every second counts for you, and that's the way it is for everybody. You're stretched thin. You got to make sure you're doing the best you can in every aspect of your life. But your time is the thing that's most important. So wealth, actual wealth, is the ability to say, I can do this because I can afford a sitter to come, or I can do this because I can take a couple of days off to be with my kids for those health appointments or that trip to wherever, Disney or whatever it is that's important to you. The ability to say that, to be able to make those decisions without saying, I don't know if I can't afford this. That's the difference. And I don't think people focus enough on that. I think, again, they're focused on the number. They're focused on what other people are doing. They're focused on what they see, not who am I and who do I want to be in the future, and how do we back a number into that?
Keeping up with online reviews across platforms is tough, but FeedCheck makes it easier by bringing all reviews from all channels into one place. In addition to tracking your own feedback, you can even monitor competitors to see how you compare. They provide deep insights into customer sentiment, trending topics, common issues, and patterns that might otherwise be overlooked. Plus, real-time alerts mean you can respond quickly before things escalate, and AI-powered suggestions help you craft better responses. So, if you want to stay ahead of your reputation, book a demo with FeedCheck at feedcheck.co/sweetsuccess or through the link in the podcast notes. So you're not going to give us the magic pill or get rich quick scheme. There is no secret that we could all do instantly like Instagram says.
Yeah, if I had it, I wouldn't be talking to you, or I'd be talking to you from my yacht.
Hey, exactly. We'd be on the yacht together.
And in the Mediterranean, I would be, cashing in some cryptocurrency in exchange for fine bottles of wine somewhere off the coast of Italy. But no, I don't have it. But I do know that the magic is in not worrying too much about it, but just being consistent about the investing, and then doing that big check-in every couple of years or so and saying, okay, am I in the right investments? Look how much of this has grown, because we'll go through periods of time. And this happened over the last 5 years. Coming out of the pandemic, stock market fell 34%. And then it went up 100% in 2.5 years. Like, if you're missing that because you're worried that, or you don't trust it, or you don't think you have $50 to invest, you're missing some of the greatest runs in generations. And who knows when those will come around again. Or if you were, worried, like we all are, about a mounting deficit or the election or who's sitting in the Oval Office or what's going to happen to the Federal Reserve chair, or all the things that financial media, guilty as charged, want you to worry about and pay attention to, and you're not just doing the thing, investing over time, watching it compound, staying consistent, staying in it, rain or shine, sleet or snow, then you're missing out on the ability to generate wealth.
Yeah. Well, speaking of our yacht, many of our listeners are in the hospitality world, running hotels, maybe on a yacht, short-term rentals, travel-adjacent businesses. What are some indicators or trends in the markets that you think they should be keeping their eyes on?
Yeah, well, obviously it's consumer spending, but there's a real difference in spending and the way we spend. In the stock market, we call it consumer discretionary versus consumer staples. Travel is consumer discretionary at its finest, right? We're not going on a cruise, going to Paris if we don't have the money, or we feel like we don't have the money, or we feel like we're not going to have the money. So I watched that pretty closely. And you can track this through what we call exchange traded funds, that it really are a basket of stocks in each sector. And I just did this on my podcast. I was just talking about this. In the last couple of months, post, the 90-day extension on tariffs and the relaxation of a lot of that aggressive tariff talk, that's resumed recently. But we saw this split in the stock market. It used to be going into April and going into the beginning of April when tariffs were announced, consumer staple stocks, McDonald's, Coca-Cola, Costco, those were doing much better than discretionary. Nobody was booking trips. Nobody was, making a long-term vacation plan. That's changed, and that's changed a lot in the last 2 months. So I watch that pretty closely. I also, because I'm a finance geek and it's my job, I listen to the earnings conference calls and read the quarterly reports, and not everybody needs to do it. We'll do it for you, of companies like Delta Airlines, United Airlines. And guess what? Like 3-4 months ago, Delta CEO Ed Bastian would not give a forecast for this quarter. He just wouldn't. He's like, we don't have clarity. We don't have enough future bookings. We can't tell you how things are going to go. United was very similar. We just don't know. Well, now they're talking and they're saying bookings are back, and bookings are back in luxury. Bookings are back in the front of the airplane, less in the back, but more in the front, and more travel to Europe, to the places people love to go in Europe, and actually places all over the world. Even though the dollar's weak, the wealthy are willing to travel. That discretionary money, they're fine with it. Why? Stock market's at a record high right now. There have been more 401k millionaires printed last year than any other year in history. Now, all this could change real fast, and consumers are very quick to change their behavior, but I listen to what they have to say. And they're a pretty good canary in the coal mine, because they're the ones dealing with future bookings. And then there's, the basics of, how does my neighbor feel? What's the real feel of the economy? Now, that's not a number you're going to get in the Consumer Price Index or in the Labor Department's non-farm payroll survey. You're not going to get that. You're going to get what the government's telling you through some survey that they've been doing for 60 or 70 years. And doesn't really matter much to me. I care about how you're doing. I care about if my neighbor lost their job because they were working for a contractor that had a deal with the government. Now that's no longer existing. And all of a sudden they're selling one of their cars or they're having to move. That real feel will tell you a lot more than anything I will tell you on television.
Over the summer, you spoke about consumer spending across the industry at your sister publication, Travel and Leisure's World's Best Summit. You covered where people are traveling, how they're paying for it, and really what all of this means for the broader economy. Can you give us a quick overview of what you're seeing?
Yeah, I'm seeing better news, greener shoots, as they say, than what we saw in the beginning of the year because of all the tariff uncertainty. Now, there's still a lot of tariff uncertainty, but we have seen consumer sentiment improve, tick up in the last couple of months. We've seen spending hang in there. We're really good at spending in this country. And we've seen the high end continue to do well. And that is an unfortunate state of our economy. It's a K-shaped economy, but the high end is what pushes luxury travel. The high end is what pushes travel and discretionary spending in general. And it's back in a lot of ways. And you can see that through the forecast from the major airlines that fly internationally, especially. You're not hearing it as much from the domestic carriers. You're seeing a lot more staycation or car vacation than those flying. But you are still seeing some heavy bookings in places where you think people wouldn't be going right now because the value of the dollar is low compared to other currencies. And also it's just expensive to hit the road, but that's not stopping, I would say, the top 10%. They are back at it and they're loving it. And they're showing us on their Instagrams and their Facebook pages how much they're loving it. So you can feel it, especially in the high end, as I say, places throughout Europe where people love to go, the Portugals, the Spains, Italys of the world, and even France, and even in the Scandinavian countries. We've seen a lot of travel interest there. When we look at the data where people are searching across our publications, there's a lot of that going on right now too. So you can feel that, but also in the experience, people are willing, especially the wealthy, but people in general have really come around to the notion that that's what the money's for creating lifetime experiences that we will never forget and share as a family, share as a couple, share as a group of friends. People want the experience, are willing to pay for it, and I think the secret sauce of the travel industry going forward is going to be this and that, right? It's the trip to Europe plus taking in a soccer match. It's the what can I do on my trip to see the World Cup when it comes around again, plus that. So it's combining those things to enrich the experience. It's a private sit down with a great chef in a villa, plus this, plus that, because they want the pictures, they want the memories that mean more to them than the things themselves. And I think that's super important for the travel industry to tune into. And I think they already have in a lot of cases. When you think about some of the great resorts that have been opening up around the world. But people will spend the money on that, especially those that have it. And guess what? There's a lot more people that have it just because there's more millionaires out there and they want something they can't forget and nobody else has.
You also mentioned that we're on this cusp of this largest generational transfer of wealth from boomers to millennials. But you pointed out a few factors that I hadn't really been thinking about when we think about that transfer. First, people are living longer, so their expenses are needing to last longer as well, right? They're being stretched further. You're also now seeing boomers start to spend some of that wealth on experiences for themselves, so not passing it all down. And a stat that you guys referenced in your conversation was from the US Census Bureau. The number of people 85 and older will nearly double by 2035. What does all of that combined mean for our industry?
Yeah, we're getting older, we're living longer. And it costs more to live longer. The products that the financial services industry came out with in the last 20, 30, 40 years, like annuities, are just not lasting long enough. People are outliving that money. Now, those that have invested and those that have owned assets and seen them appreciate over time are going to be fine. But for a lot of people, they're outliving that. So they're either working longer or taking a part-time job in so-called retirement, delaying retirement in many cases, or downsizing quite a bit so that they can afford their lifestyle. At the same time, you do have this higher end that's like, I accumulated a lot of assets and just giving it away is not tax efficient necessarily. And plus, those kids don't deserve it. Or I want to enjoy myself. So you're seeing a lot of a lot of older, wealthier people hit the road. And it's not the tour bus crowd necessarily. It's the experience crowd, as I just described. So it is, a couple, imagine several couples in their 70s saying, let's go rent that villa, outside of Montalcino and actually pick the grapes and stomp them. And let's do this together. And let's do friend group things because, A, we don't know how long we're going to be here. B, we got this money. That's what it's for. And let's create the moment and the experience together and that photograph we're all going to have and pin. So there's that folks need to pay attention to. And again, it's also the combination of things. It's not enough to put, for people to jump on a cruise, although there's plenty of people that just love to go on a cruise and be taken places and do the tour that way. And that industry, is a good example of one that has rebounded nicely. But they want multiple things in that trip so that they can hit a few stops, have that memorable moment here, see that game there potentially, maybe go to the British Open. They want to add things. It's this and of that, and people have the money and are willing to pay for it.
You also said that there were more millionaires created last year than at any other point in history. It's a mind-blowing stat. Why do you think that is? And it sounds like that's going to be good news for the travel industry.
Yeah, and that's just more older people who have been invested for a very long time in basically a secular bull market minus a couple of dips over the last 20 years. We've had an incredible run as investors. I said the average is around 10% a year. The last few years has been closer to like 12 to 13% a year. But for the mega wealthy, who are, have the hedge fund or the private wealth manager that puts them into the special thing that makes it more tax efficient, but also has the higher upside, they're doing fabulously well, right? So you have regular 401k millionaires that just did what I said. They took advantage of time and they were consistent about it. And when you have a bull market like the one we've had for quite a while now, that's what happens to your money. It grows upon itself. And we've had some unbelievable stocks that have driven wealth like you wouldn't believe. NVIDIA just being one of them, but NVIDIA, Meta, Alphabet, Palantir, like this new generation of stocks that have delivered outsized returns of 2, 3, 4,000% over the past decade. That's made a lot of people a lot of money.
Yeah. The phrase American Dream, you had said, was the most searched for phrase on Investopedia in 2023. Do you think the American Dream has changed? Why do you think people are searching for that?
Yeah. I don't think they were searching for it like they lost it and they were wondering what it means anymore.
Where is it? Help us find it.
Yes. Where's Waldo? No, I think it's a phrase they'd heard enough of and basically been fed by the financial services industry and the media, again, guilty as charged, about what life should be like when they hit their golden years or when as they get older. They should be able to afford a home. They should be able to take their family on vacation. They should be able to afford some pets, marry off a kid, bury somebody. And I think that notion of this is something that I'm entitled to if I just do the right thing. I went to college, right? I got a job. I've been hitting it hard for the last 10, 20, 30 years, but I just don't think I can ever have that thing. And that's because home affordability is at an all-time low. The value of home prices has gone, higher and higher every single year. And the ability to afford one of those homes has just become harder and harder. And if you are not invested or you don't own assets like a home, you're just out of it. And I think people felt like that, especially younger people felt like that was getting further and further away. That notion of that dream was gone. But reimagining what that dream could be becomes very interesting from a financial planning and wealth management perspective. We actually put a number on how much that dream would cost in today's dollars. And I'm not talking about the needs, being able to feed yourself and your family and go to the doctor and pay the rent. I'm talking about the wants. And again, that's a retirement income. Own 5 or 6 new cars over your lifetime. Have a few pets that cost a lot of money, by the way. Marry someone, send your kids to college, right? Things that you would like to be able to do if you work hard and you feel entitled to it. That's what this country was supposed to be all about. I think a lot of that became a foreign notion to folks. And that number was $4.4 million last year. It's going to go up this year because things keep costing money. Well, you see that number, for a lot of people, they go, I'll never have $4.4 million. Actually, you might.
Sure.
If you work the median, for 40 years at the median income, you'll have $3.3 million by the time you're 65. But there's still a gap there. How do you close the gap? By investing. But back to what I was saying about this rethinking of the dream. What if home ownership wasn't part of that anymore, or as important as it was. We were all taught, and we should be entitled to buy our own home. And when you own your own home, you've done it, right? You get your fence, you get your dog, maybe you throw a pool in the back. Well, if you didn't do that, that just clears up $1 million or more for the dream that you want to live. Now, your dream, Katie, and my dream are different. And anybody listening, their dream is different. Their dream might cost $7 million. It might cost $2 million. It might cost $500,000. Whatever it is that you want to be, the you want to be, is got to have a number on it, and you could work your way back from that. But if you didn't have the home part of it, what else could you do? You could theoretically pick up the family, move somewhere for a year, have a totally different experience, take a month-long vacation. Who does that except the Europeans, right? You could use that money in a much more creative way and create your own dream. So I think it was that dream that you sold us, that's not for me. And that number's crazy. I have a different dream, and I don't need all the things that you think that I need or that you've told me that I need. I need to create a rich experience for my family, for myself, that is meaningful to me, right? We got to get back to what means something to us. And I think, sadly, the pandemic kind of woke people up to that in a lot of ways. And also just the fact that everything costs more money is making people realize, well, okay, but maybe not that. Maybe it's this for me. And I think that's really important and super important for our industry, but also important for people to hear. Like, you don't have to do it the way everybody's told you to do it. Just do it your way, but do it the right way.
Yeah. And that flexibility of being able to move abroad or pick up and go for 4 weeks on vacation. Ooh, scary, I know, to us Americans, as you said. I think that's that spirit of, if not now, when, or that kind of YOLO mentality that you and Jackie were speaking about at the summit. How are you seeing that play out in consumer behavior?
Well, you see it in a couple of ways. Sometimes you see the ultra promiscuous side of that, which is people taking really risky bets on investments like meme stocks or some crypto tokens that are literally jokes. And that's younger people, and I get it. Not just younger people, but mostly younger people. But you also see it in the way people are choosing to live their lives. And that could be a month in Costa Rica, or I'm out of here. I don't need to get locked into the rat race of a job, especially if I have to come back into the office 4 days a week now, or 3 days a week, or whatever it is. Maybe there's a different way for me to do it. Maybe I'm a gig worker now, or maybe I'm an influencer and I'm going to create my own audience. I don't need to go work for a major network anymore. I can go create my own fan base and then sell to them and monetize myself that way. So you see it in the way people are being creative about their careers, about where and how they're living, about how they're raising their families, and also in the way people treat money. And now we talked a little bit about crypto and Bitcoin before. There's 50 million people that actually own cryptocurrency out there. And some people have been buying it for years and created incredible wealth, right? Where they're not a part of the financial system that you and I might have grown up with, right? Their money is in crypto. And when they need legal tender, maybe they'll cash in a little bit of Bitcoin and they'll use the cash and go pay the rent or whatever, they're buy the house. I know plenty of people like that. Well, that industry has evolved into our financial ecosystem in a way where if you are a heavy duty crypto investor and that's where your assets are, you don't trust banks or you never built a 401k or any of those things, but you got a lot of money there. Well, now you can borrow against it and get real legal tender, real dollars out of it to go transact in this world, right? Or you can buy a home now with Bitcoin or put money down for a mortgage with Bitcoin. You can get credit cards today where your rewards are not cash back or airline miles, which are, may or may not be worth what they used to be. You can get it in Bitcoin. Now, again, you got to believe, and you got to believe that Bitcoin is going to be here for the next 10 years and that it'll continue to grow in value. But there's other means of exchange, right? The way people are thinking about money has fundamentally changed. Investing is investing, but the way people think about how we transact, what our medium of exchange is, that's very different right now. And that mentality is going to be the one that this is the new way forward for a lot of people. There's generations of kids that will only grow up knowing this. Imagine that. Like you and I'm older than you. We grew up, in an era where we're credit cards. First it was charge plates, then it was credit cards, right? Then it was Venmo, right? And PayPal, right? I'm just peer-to-peering you money now, right? Yeah. And that's fine. Hey, we went out to dinner last night. I used to peel off $20 bills to my friends, 17 cents. But today it's like beep, 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 beep. So that's like natural to us. Imagine what that's going to be like in a digital currency world, which we're kind of in right now.
Is there one destination, hotel, or travel memory that to you really felt like a world's best moment?
I'm gonna go with an awesome little resort outside of the town of Jose Ignacio in Uruguay, where my wife is from, where I got married and fell in love, called Casa Suaja, just a little bit beyond the town of Jose Ignacio, which is beyond Punta del Este. And I don't want to spoil the secret, but here it is. It's a lovely little resort. It's light touch. The rooms are amazing with enormous windows that open up, and you can see the Atlantic and the breeze. And they have a great pool and areas to walk around, but it's the vibe in sort of like the breakfast center there, where you just walk in the morning, you just feel like you've found your spot, right? There's delicious food, great delicacies from all over the world, but they just make you feel quite at home there. You cross the street, you are really literally on one of the best beaches in the world, and it's chill. And right down the road, there's great kiteboarding in a lagoon, and I'm a kiteboarder. So that just place feels right to me. It's got the right tempo, the right vibes, the right terroir, so to speak. Great food, great wine, great food, and just a light touch by the staff. But if you wanted the massage and you wanted the full treatment, it's all right there for you. I just feel at home there, and I was there recently. That's why it's fresh in my mind. But I've had some great trips there. I'm from New Mexico, and there's some beautiful resorts in northern New Mexico that I also love. But I'm going to go with Casa Suaja, just outside of Jose Ignacio.
If someone receives a large sum of money, let's say it's an inheritance or their annual bonus, what do you think they should do with it?
It depends on who you are. So if you have debt, I would say service that debt, right? The debt is an anchor that's just going to drag you down no matter how much you invest. If you always have that pulling you the other way, you're really not making progress. If you have no debt, or you have manageable debt and you can invest it, well, certainly. And if you're already invested, maybe you find another way to diversify what you have instead of just piling into the same thing. And I think we do a lot of that. We end up buying the same thing over time. We're habituated as investors. But if it's extra discretionary income, hey, pay yourself a little bit, have fun with it, but try to find a way to invest it that might actually be a new avenue for you to create wealth. But debt service is the most important thing you can do. And beyond that, I have two rules, and they're really one rule combined, which is generosity and reciprocity are undefeated. So if you can make somebody else's life better with that sum of money, by giving somebody a chance or making an investment in someone or helping somebody, it'll come back to you tenfold. Again, generosity, reciprocity, undefeated.
Caleb, thank you. This has been so great. I want to ask you the last three questions that I ask every guest. And the first is, what was the best hospitality experience you've ever had?
Well, I'm going to give you an answer that you might be a little unorthodox, because I was actually in service when I had this hospitality experience, and I was a busboy in a very popular restaurant in Santa Fe, New Mexico, called Tomasitas. And anybody that knows Santa Fe knows Tomasitas by the railroad station. That's where I kind of grew up cooking and learning the restaurant business. And I was probably 15 or 16, and I was in the kitchen. It was a busy Saturday night, and that place gets packed. It's probably the most popular restaurant in town. And a pipe broke underneath the sink by the dishwasher. And it was mayhem, as you can imagine, in a really busy Saturday night. And the first person underneath that sink with a wrench was the owner, Georgia Marial, who's still alive. God love her. She was one of my first bosses, wearing a silk dress with literally a monkey wrench, fixing the sink herself. There's 5 dudes sitting around her, waiting, watching what she's doing, but they were moving too slow for her. And it was breaking service. And you can't break service on a Saturday night. The owner, worth millions of dollars, one of the most popular women in New Mexico, maybe the Southwest, underneath the sink, fixing it. That to me was hospitality. That's why I love the restaurant industry. I did 12 years in it. I owned a little piece of one for a while. That was a bad mistake. But I feel like that's why I'll end up back in it when I'm older. I just feel like that. I want that sense of service, hospitality. I'm in this with you. I don't care if you're a dishwasher, a cook, a waiter, or I'm the owner. I'm going to make sure I take care of it.
That is an excellent, excellent example, and just shows such leadership as well as hospitality too. On the flip side of that, what was the worst hospitality experience you ever had?
Well, on that trip through South America, Central and South America, I spent a few nights in Tegucigalpa, Honduras, the capital there. It's a lovely but very rough town. And I didn't have any money, so I was staying in probably a $7 or $8 a night pension. And just down the hall, somebody got stabbed, for me in the middle of the night. And there was chaos, people running around, blood everywhere on the floors. Then the toilets broke, and there was blood and sewage and madness and fear. And I was a stranger in a strange land, young man with a very valuable television camera, sleeping by myself, huddled in a room, walking out and seeing this madness. And certainly there was no management to complain to at the time, nor were there any police that came to our rescue. I just had to pack it up and walk out. So that was it. I don't even remember the name of that place. I just remember that night being one of the scariest of my life.
Yeah, those are excellent high-low examples there. Really excellent. Final question for you. What does hospitality mean to you? And is there anyone, a person, a brand that you think has truly mastered it?
Yeah, well, I mentioned Georgia Mariel, my former boss at Tomasita's, a great restaurateur and a great leader. I learned a lot from her about service. And it wasn't just the fact that she could get under the sink and fix it herself. It was the way she treated the front of the house and the back of the house and the guests. Mm-hmm. And no matter what was going on, it was always high class, be of service to your employees, be of service to your customers, right? And never let anything hurt the brand and the business. And I learned a lot just by watching the way she operated and the way she dealt with people. And I don't care if you were like me, the lowest on the totem pole, a little 16-year-old busboy or prep cook in the back, or if you were, the general manager. She had a very consistent way of expressing leadership, confidence, but also making people feel like they were a part of the equation. So I'll never forget her and that lesson. And I've had, great restaurant experiences throughout my whole life. I love to eat and I love to travel and eat, and doing that through Italy when I was an exchange student, but going back with my wife and our little kids through a tour of Siena and Firenze and Tuscany and Montalcino. Those were some of the most incredible experiences I've ever had.
Wow. Caleb, this has been so insightful, fun, fascinating. Thank you so much for the time today.
Thanks for having me.
All right, everyone. It's time for today's sweet summary, where I break down the key insights and actionable takeaways from today's conversation. If you've ever felt intimidated by terms like ETF, inflation, or compound interest, you are not alone. And that's why I was so grateful to get to spend some time with Caleb today. His gift for storytelling helps make finance feel understandable, attainable, and dare I say it, a little fun. Which is fitting if we go back to the original intention of Investopedia, to make complicated financial terms easier to understand. Boy, do we all need that. It's something Caleb does masterfully, destigmatizing finance and chipping away at the fear that keeps so many of us from taking control of our money. I loved his 2 golden rules. First, start early. As he joked, the best time to start investing was yesterday, but the second best time is today. And second, know what you own. That means no more burying our heads in the sand. We need to open the closet, look the scary financial monster in the eye, and get honest about where we stand. Sadly, there was no magic pill, get-rich-quick scheme, or shortcut to wealth that Caleb would endorse. Instead, he said our finances, like most things worth having in life, are built brick by brick. We should have an idea of where we want to go, but we may not know the exact path we'll take to get there. The most important thing is continuing to take one step after the other. I see a lot of similarities with that mentality and Caleb's career path. He didn't set out to become the editor-in-chief of a trusted financial publication. He knew he wanted to be a storyteller, and he followed his curiosity. He started working in kitchens so he could afford a camera, then negotiated room and board in exchange for shooting documentaries in South America. He then followed his passion into the New York newsrooms of Bloomberg and CNN. And because of all of his varied experience along the way, he's now able to bring Investopedia's content to life in a variety of ways. from producing a live podcast directly from the stock exchange, to being interviewed as an expert on television, to creating content for the brand's social channels. The biggest takeaway for me from our conversation was the difference that Caleb pointed out between being rich and being wealthy. Wealth, he reminded us, is all about time. And today, more than ever, having money is not just about saving for a rainy day. It's about spending intentionally on the things that matter. Taking that bucket list trip with your family. Attending that once-in-a-lifetime concert with friends. Planning that weekend getaway that gives you space to breathe. Because as Caleb said, that's what money's for. Whether it be in cash, gold, or crypto. And that concludes another episode of Sweet Success. If you enjoyed today's conversation, please subscribe, rate, and review the show. We all know how important those 5-star reviews are. I also want to say a massive thank you to each and every one of you for tuning in. It means the absolute world to me. And I'd love to hear from you. If you have ideas for future guests, new topics to cover, or even just want to say hi, don't be shy. Message me through our website, sweetsuccesspodcast.com, or on social media @sweetsuccesspodcast. That's sweet like hotel suite. Once again, I'm your host, Katie Cline, and I'm super excited to see you all next week.